Hello everyone, and welcome to this session in which we will discuss the inventory and the warehousing cycle. This is a new accounting cycle. This will be an introduction to this cycle. Now, auditing this cycle in the real world can be complex and time consuming. Well, why? For one reason, inventory can be located in various warehouses across different states, cities, or even different countries. And what would that do? That will make it harder for the people who are counting the inventory to actually count everything properly. Two, diversity of inventory. Every company will have different type of inventory. Even within one company, we might have different type of inventory. Chemicals, electronics, jewelry. For certain conglomerate, they could have all sorts of inventory. Now, what does that mean? It means in certain circumstances, the auditors need special knowledge to check for condition and value of these different items. So if you're auditing a jewelry store, do you know how to audit the inventory, the gold? What's the carat? They've told you it's 18 versus 24. Can you check that? If you are auditing a construction company and they told you 30% of the project is done, well, if you're going to go out there, walk around, can you determine that 30% of the construction in progress is actually 30%? Also, different companies will use different valuation method like FIFO, LIFO, weighted average, specific identification. Those are some of the reasons that makes auditing inventory a bit complex. Now, keep in mind, inventory could be a large amount, especially for retailers and manufacturers. If you're a manufacturing company, also you could have different type of inventories: raw material, work in process, finished goods. Retailers, their largest asset could be inventory. So the numbers are large and they are important. Now in this session, we're going to look at the major parts of the inventory cycle. We're going to look at the documents involved and the accounting involved. I'm going to start by showing you the six major function, which is the six major parts of the inventory and the warehousing cycles. And those are process purchase orders. The first thing you do is you start with a purchase order. Then you would receive the raw material. We're assuming we're dealing with a manufacturing company. You would store the raw material. You would process the goods. You move the material into production. Then you will store the finished goods. Then you actually sell the goods. Now, the good news about this cycle is we already looked at the purchasing cycle, which is process purchase order. We look at the purchasing cycle and shipping the goods to customers and storing the finished goods. We looked at this in the sales cycle. So basically, inventory is part of the purchasing cycle and part of the selling cycle. Now, if you know anything about Farhat, once I have a list, I'm going to go over each item of this list separately. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
Before we proceed any further, once again, I want to go over the basic accounting entries. So these are the typical account that are involved in a manufacturing. And I hope you remember this from your managerial accounting or cost accounting. If not, I'm going to take you through a quick overview. First is we might have some inventory and raw material, which have beginning raw material. Then we make purchases. Then we issue some of that raw material to work in process to the WIP account. Then once we are done, we would have an ending raw material that becomes our beginning raw material. Then we are going to incur labor and apply labor to work in process. Then we are going to record the actual labor in the debit side. Then we are going to apply overhead according to some formula. Then we are going to record the actual overhead, then close this account. Then we're going to have ending inventory after we transfer any work in process to finished goods. Now in finished goods, we might have some beginning inventory. We will add some cost of goods manufactured to it, then we will have ending inventory and finished goods. And once the goods are sold, they are transferred from finished goods to cost of goods sold. And obviously, as they are transferred to cost of goods sold, we book our reward, which is our sales. So this is the basic accounting entries for the cycle. One more thing I want to cover with you before we dive into the 6 steps is the perpetual inventory master file. This master file could be a piece of paper, could be an Excel sheet, could be a software, could be a very complicated software. It's a record that keeps track of inventory. So a perpetual inventory master file is constantly, because it's a perpetual, is constantly updated record of your inventory. It includes information on units acquired, units purchased, units sold, unit on hand, unit manufactured, so on and so forth, and unit cost as well. This is a separate record. There's a separate record kept for raw material, for a manufacturing company, work in process, and finished goods. We need to keep track of our inventory in an inventory master file, and each of the inventory will have its own inventory master file. Now let's recycle back to the 6 steps. Remember, the first step was the processing a purchase order. This is where it all begins. Company buy material to make their product. Obviously, they need the raw material. Now, it's very important to have good controls over these purchases. And we covered this cycle we covered this step in the acquisition cycle. So if you'd like to go back and look at the acquisition cycle, you can. Now, when departments need something, assuming we are a manufacturers, we might fill a purchase requisition, and if we need to buy it, we're going to fill a purchase order. I'm going to show you a purchase requisition and a purchase order. I'm not going to show you specifically for a manufacturing company. I just want you to know this could be for a manufacturing company. This could be for a retail company. So this tells the purchasing department to order the inventory. So this is the first step. Then a purchase order is created. At this point, this can be done by a person or even a computer system. So the purchase order could be done automatically by a computer system, or some person will have to go through it mechanically. For example, Dell computers sometimes wait until a customer orders a product until they do what? Until they create a purchase order for the parts needed. So this is the first step, purchasing orders. Which documents are involved? A purchase requisition and a purchase order. Let's look at a purchase requisition form, purchase requisition order. This is the purchase requisition. It will have an identification number, PR 2025017. You're going to see this again, the date, requested by John Smith, department IT, so on and so forth. And this is what we need: 5 Dell laptop, 5 wireless mouse, 5 Microsoft Office license. Then they will have justification for the purchase order, the suggested vendor where they think they should buy it from, and there's a place where people will need to approve this purchase requisition. This purchase requisition, once approved, it goes to then the purchasing department will prepare a purchasing order. What's a purchasing order? Basically ordering the item. It will have a unique number, and that unique number, that PO number, would reference the purchase requisition number 2025017, the date, where are we sending it to TechWord, Michael Rivera, their name, their address. This is what we need: the subtotal, the total amount, delivery instruction. All hardware must be delivered no later than June 1st. Who should the license be assigned to which email, and authorized by whoever it's authorized by. They sign it, and that's the purchase order, and they will send it to the vendor. Who's the vendor? TechWord Solutions. Once the vendor received the order, they will happily ship the product. When the material arrives, they need to be checked for quantity and quality. So we want to make sure that the quantity is correct, the amount, and the quality. Is it in good condition? Is this what we ordered? Someone will check it, and they would prepare something called a receiving report. They would also receive with it a vendor invoice. Sometimes the vendor invoice comes with it. Sometimes the vendor invoice is sent directly to the accounting department. We discussed this in the purchase acquisition. Then from the receiving department, the material are sent to the storing room. Let's Let's take a look at this multiple choice question from farhatlectures.com. Which of the following best describe the perpetual inventory master file? It's a computer generated file that includes all acquisition transactions processed by the accounting system for a period. Is this what the perpetual inventory acquisition? I would say no. This is like a purchase. This looks like a purchase journal if it's the acquisition transaction only. That's not the perpetual inventory. Accounting record that consists of master files, spreadsheet, and report that accumulate material, labor, and overhead by job or process as these costs are incurred. Well, this sounds to me like this is work in process, record for work in process. Because in work in process, we could have cost by job or process costing, but this is the WIP. This is not the perpetual inventory master file. A continuously updated computerized record of inventory item purchased, used, sold, and on hand for merchandise, raw material, and finished goods. Is this the perpetual inventory? Yes. Remember, perpetual inventory, we could have it for raw material, work in process, finished goods. It shows you how much you have, what did you purchase, how many are used, and how many left over. So the answer is C. Record of acquisition, cash disbursement, and acquisition return and allowance. No, that's not the perpetual inventory. This could be the cash disbursement, but here we have some returns. I don't know what this record is, but the perpetual inventory master file is letter C. What should you do now? You want to go to Farhat Lectures, look at additional resources, multiple choice lectures. That's going to help you whether you are an accounting student, CPA, CMA, CFA candidate. Invest in yourself. That's the best investment you can make, and good luck.